Before we get into the charts to talk about Dollar General, I want to go over this article from CNBC. Dollar General stock plunges as challenging economic backdrop drives dismal earnings report. So this is important because this is seen as um, a thrift shop of food for lower income shoppers, and could be a sign of what's to come in the economy in terms of consumer spending. So Dollar Tree core customers are reining in their spending amid a worse than expected macroeconomic drop, leading the discounter to slash its full year outlook after dismal earnings report. The stock plunged nearly 20%, and that was by the end of the day, was the worst one-day drop ever in its history. After the retailer missed estimates on the top and bottom lines, same-store sales increased 1.6, but the growth was half of the 3.8% as expected by analysts. The CEO said regarding the macroeconomic environment has been more challenging than expected, particularly for our core customers. The company believes those headwinds are having a significant impact on its customer spending levels and behavior. In addition, the company slashed its full year outlook for the remainder of the year. It now expects net sales to rise between 3.5 and 5% compared to 5.5 to 6%. It is now expects earnings per share in the range of a flat to down 8% from the prior year, compared to the previous guidance of 4 to 6% up. So let's get into this video as Jim Cramer talks about Dollar General's earnings results.
All right, let's get to a mad dash. 8 minutes before we get started with trading here at the New York Stock Exchange. We talked a little retail. We didn't get to Dollar General, which actually is worth getting to, especially market cap-wise. It's funny. We'll talk a lot of Macy's, which is minuscule. This is not.
No, and what's interesting, David, obviously,
although it's on its way to being a lot less.
Right, but obviously, this is something that's supposed to do well in a slowdown. But the numbers, David, the comp gain outlook, just 1.2% from. I mean, just terrible. From 3.35, midpoint 8%, now cut dramatically. And David, I've got to tell you, the trade down, it didn't happen. They're not a major winner. Now, it's very interesting.
So maybe it's a reflection of the fact that the economy is still strong and the consumer is still okay.
That's how I read it.
Although we keep getting mixed results.
That's how I read it. It's very hard. That's why I want to pause
on that. I mean,
but I'll tell you what's interesting. Ryan Reynolds, who actually, people should know, is a brilliant business person. He said to us in Mad Money, the aspirational trade is over. People don't aspire. It's too expensive. They just went okay. They went okay. This is anti-aspirational. That doesn't come into play either. My Dollar Gen, I remember his data gen was teaching. My Dollar Gen is clean. You can eat off the floor. Not that I recommend that. They've got good bargains. But, David, the stuff is $5, $6. Where's the dollar? Except for the candy aisle. Cowtails. $1 buckaroonie.
Got it. All right. So what does the forecast call for here? Given, but look, the stock is already off.
I know.
Rather significantly over the last few months.
Well, look, I've got to tell you, the forecast, the guide was so negative. Now you have to wait to see. I think you have to wait to see. Okay. They're just, you expect earnings to be flat to down 8 year over year. Dave, we got to see.
Look at
but
that.
They're going to run.
That's not.
They're going to run.
3 years, baby. Down 7%.
But this was an LBO that did so great. And remember, Dollar Tree's been in a little bit of a pickle because of Family Dollar.
Yep.
But these stores, if you've been to them, what you'd be surprised at is they're not $1. We go there because we like it. I get a lot of cool stuff for the holidays. You like balloons and stuff.
Oh, nice.
But
Yeah.
The balloons. You have balloons when you have
I don't do the balloons thing.
But balloons is like helium. Get the helium.
Thanks. All right. That's great. Balloons.
It's what people do in America.
All right, so that was Jim Cramer's take on Dollar Tree. Now we're going to go to the charts, and we're going to start with the monthly chart. And this is pretty ugly. This is a monthly gap. Real ugly. Now, just looking at the monthly chart, what you can see is that price is at a level where previously it served as resistance. So we just mark off. And that resistance support band is at the 160 level. We can see that we're getting reaction today. And that's because the entire market is up today. If we go to the weekly chart, kind of looking at that level again, this was the pandemic lows. Just looking at the volume in this area. If we go to the daily chart, what we can see is today is an indecision day. You have traders, analysts digesting the information. This was probably a clue that price was going to drop. You had decline in price, you had several gaps, and then you had a basing right before earnings. And that basing occurred at a pivot low, roughly at 201. And on the news, price gap down. So I finally agree with Jim on one thing with regards to Dollar General. You have to take a wait and see approach. After earnings, usually there is a so-called 3-day rule. So after Monday, you have to assess the price action over the last previous trading days and then kind of make a decision. Again, Dollar General is a gauge of consumer spending, and it's not really looking good. As the U.S. household is at record debt, credit card, car loans, mortgages, it's not looking good. I would not touch this stock as of yet. Thanks for watching. Subscribe. Please like the video.